So guys and ladies, I thought we'd just go over the correlation tool that we use on FX Street. Now, it's just going to be very brief. I know a few of you was asking about this. Now, the only reason why I use this tool is not as an indicator to help me to get into trades. It's just to help me to avoid negatively trading against myself. Now, think about this, guys. If you are planning to trade Euro USD alongside Pound USD, and they're both positive correlating pairs, which basically means they move together, and you decide to sell Euro USD and then buy a Pound USD, you're basically counteracting both trades, hedging against yourself. So this tool is very good to help you avoid doing that. And then secondly, the other use for this is to help you to see if the pair that you're trading lines up positively with another pair that will be moving in the same direction. Not meaning that you're going to sell them together, because again, that means you're risking double. But what it does mean, because some pairs move faster than the others, if you decide to sell USD JPY and USD Swiss franc, if they have a positive correlation of around 90%, it means that they're both going down, but one may move faster than the other and one may move slower. What that means is if USD Swiss franc is sitting on a support level, and it finally breaks and closes below, then eventually what will happen with USD, it will end up catching up. So if you're planning to trade USD JPY, what that means, you can have just a little bit more confidence to then get into that trade eventually when the opportunity arises. So that being said, what we're looking at today is the correlation tool on FX Street. You guys should be able to access it on Google very simply. What we're doing is we're making sure that we're selecting the daily chart. The reason for that is because we need to make sure we have enough data to work with. Too less of data means that we're going to get false information. So I personally prefer to use the daily chart. Now, with a positive correlating pair and a negative correlating pair, we have a figure that comes up when looking at this. And we look at this figure as just a percent. So we look at it as 81%, if you can see it there. When choosing to use a positive or negative correlating pair, what you want to make sure is that it's above 70%, meaning 0.70. Anything less than that, then I would not use it, okay? Now, just as an example, say now you decide that you want to sell Pound USD, okay? You can go over to Pound USD and then you can select the daily chart and see, right, the correlation between Pound USD and Euro USD is 81%. Let's see what's happening. So we'll go over here. We'll do Pound USD up here. And we'll do Euro USD down here. What we can see from this chart is that both pairs were moving down almost simultaneously. Okay? At the point, it has moved down. Not simultaneously, but has moved down. The example here on British Pound USD is that it was moving sideways for a much longer period of time than was Euro USD. But we can see finally, once Euro USD decided to push down and break and close below structure, eventually after it continued to push down, then British Pound USD caught up. So the way I'm going to use this is if I plan to trade British Pound USD, I'm then going to go over and look at Euro USD and see, is this breaking structure? Is it pushing down? And are we getting a strong dollar currency pair to continue down? If that's the case, then all I'm doing here is waiting patiently for price to break this. Eventually when it does, because it will catch up, look for a retest or an entry to sell the market. And that is it. That's as simple as I'm keeping it. I'm not going to say sell the minute this goes down because it may not line up. And as you can see in this situation, we was moving sideways. So we had to wait for price to pull back here for a double top or whatever you want to call it, and then sell the market or wait for the break and retest in this instance. Now, the other way you're going to think about this, if you plan to buy, let's say USD JPY and USD Swiss franc, then what that means is you're basically hedging against yourself because it makes 0 sense. So let's take a look at this. On the top one, we'll look at USD JPY. And then on the bottom one, we'll look at USD Swiss franc. USD JPY, USD Swiss franc as a positive correlating pair, correct. Now, what we're looking at here, and the correlation on this at this moment in time is 90%. So more often than not, they're going to move at similar paces. So say you looked at this and you had your chart drawn here on dollar Swiss franc, and you said, well, it looks like price has come back up to make a double top of the previous structure. You've overlooked that the structure's changed and you want to sell here at this level. It will make sense if that's all you're looking at and that's how you understand the market. But then when we line it up with a correlating pair and then look at the structure and say to us, well, I'm only looking for buys on the structure now because price broke the structure and it's closed above, then it makes zero sense for you to decide to buy this and sell this when they're 90% correlating and almost move 100% in the same fashion. Okay? So that's how you're going to think about positive correlation. And then finally, for negative correlation, so as an example, we're looking at Aussie dollar USD and USD JPY. So Aussie dollar USD and then USD JPY. Now, when we're looking at this chart, the correlation for these two pairs is 91%, meaning that they almost move identical, but in an opposite direction. The way you're going to use this is if you start to see that Aussie dollar USD is pumping to the downside, what you can expect of USD JPY is that eventually it's going to start pushing to the upside. So simple answer to your confusion will be, well, if this is pumping down, this is a negative correlating pair, then I avoid sales in this pair and I only look for buys, or vice versa. And that's as simple as we use the correlation. Okay, I hope that was helpful. If you have questions or queries, you know where to find me, but just remember, use the daily for more information and make sure that the correlation negative or positive is always above 0.70. The higher the correlation or negative correlation, the much more accurate the correlation is going to be. Okay, take care for now and we'll catch up soon.